Hello and welcome. You're watching Business Today Television. I'm Sakshi Patra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Now, it seems like the markets have again come under some pressure. You can see some green on the screen, but remember, we have fallen quite a bit from the day's high point. The Sensex is down 950 points from the day's high level. Even the Nifty, remember, we had crossed over 25,200 odd mark, hit a high of 25,250, the highest level on the Nifty in the calendar year 2025. And then after that, we have climbed down sharply, especially in the last 1 to 2 hours in trade. And that's largely because there are war fears returning. There are fresh concerns on whether the truce will be able to sustain between Israel and Iran. And therefore, these tensions are resurfacing and also impacting the sentiments at this point in time. Sectorally, largely, most of the sectors still hold on to the gains, barring, say, media stocks as well as oil and gas. Rest of the pockets still hold up. But even for the PSU banks, the top moving sector, it's come down quite a bit from its day's high point as well. Metals hold up. Broader markets are still about 0.8% higher. Banks, financial services are also going up as well. So several pockets still holding on, and IT is just flat with a positive bias right now. Top movers on the Nifty, you have Adani Ports, Jio Finance, Shriram Finance, Grasim, these are the top movers. While on the lower end, you have oil and natural gas, power grid, Trent, NTPC, IndusInd Bank as the top laggards in trade. Let's now welcome our guest on board to understand more about the markets and the texture. Mr. Abhishek Basu Malik, the co-founder and fund manager of Shrirama PMS, is now joining in on the program with us. Hi, warm welcome, Mr. Basu Malik, and thank you so much for taking the time out. We'll start off with this again. Remember I had spoken to you last time around and we were talking about these fresh geopolitical concerns. And, seemingly we got a very good news this morning when we all woke up and Donald Trump had announced a truce between Israel and Iran. That sent, a risk on sentiment that was back on the D Street. But again, there are some fresh concerns. So it's just like markets reacting to every bit of statement and news that's coming in.
So first of all, good afternoon to you and your viewers. Uh, Donald Trump, we've seen, has a history of unilaterally announcing either wars or truces or ceasefires. So I don't think, it's being sort of like crying wolf too often, right? So I think we need to take what the US president says with a big bowl of salt. Uh, Events will unfold the way it will. I mean, we can't really figure out what is going to happen. Uh, but my sense, and I'm not a geopolitical expert, neither, a war expert that people tend to become, reading social media. But my sense is that it's going to de-escalate from here. It's probably not on the escalation path. Obviously, that can change if something dramatic happens, but it seems like that nobody really wants a protracted war anymore. So this is just a matter of time, a few hours, few days here or there, and it's probably going to subside. The
Okay.
problem with the markets is that it's not going to end here, right? After a few days, you'll have another surprise coming up from some other quarters. It could be some other war somewhere. It could be that the tariff, the tenure for which it was sort of postponed, that is going to come to an end, I think, in the beginning of July. So again, those concerns will start, bubbling up. So there will always be something or the other to be worried about in the markets. And our job as investors has to be to filter out that noise.
So, Mr. Basu Malik, help me understand then, what is your fresh approach as far as commodities are concerned, oil, crude, gold, as well as maybe currencies, vis-a-vis markets?
See, I tend to have a longer term view of investing. So, with that in mind, I think if you have a longer term view, I think businesses across the world will continue to do well. People will be around, they will consume, products, services. So, businesses that cater to human needs will continue to do well. Uh, Metals, currency, everything else is, just part of that system. But eventually, if you are betting on good long-term businesses, that is what is going to be wealth creating for investors. Short term, of course, in this kind of a uncertain period with so much of turmoil, gold and silver and these kinds of metals can do well. So can other commodities do well. But again, there are too many pushes and pulls in commodities, right? You don't know. So, for example, crude is a very good example. When this US-Iran thing flared up, everybody thought crude would shoot up. Instead, it has actually come down, right? So it's very difficult to figure out what will be the first, second, third order consequences of events in any of these global commodities.
Now, within the markets, are there any zones or themes or sectors that you believe are, war-proof, geopolitical tensions-proof, that you can continue to invest in without worrying about the noise?
Yeah, that's a very relevant question, and let's for a moment take a step back from all this news flow about the war and things that is going on, and let's look at what are the main things that is driving the Indian economy.
Yeah.
So what we've seen is we've seen tax cuts come through. We are seeing inflation reducing. We've seen
Yes.
rate cuts. Now, if you put all of these together, and we are also seeing pay commission talks starting, so that again gives a boost in in
100%.
absolute terms, plus in terms of sentiment to a very large number of public sector employees across the country. So, if you put all of these, three, four things together, what you will see is that India, the domestic consumption part, whether it is whether it is travel, whether it is wellness, whether it is discretionary consumption, whether it is eating out, whether it is ordering in food, whether it is, the entire gamut, right? Beauty products, you name it. I mean, everything that is domestically consumed uh, is going to is more likely to do well. So that is one part of the story. The other part of the story is that the government is going to continue to invest uh, in the infrastructure part of the country because private capital or private capex is not yet picking up, right? So the government needs to step in and is going to do that part. Now, where is the government putting in money? The government is putting in money, one obviously in defense, because we've in the recent past had a war-like situation with Pakistan. So we are regularly seeing orders coming in from Ministry of Defense, DRDO, etc. So that is one area. This other area where government is putting in money is railways. The government is putting in money in airports, in ports, in roads.
Correct.
So with all of these things happening, there that is also going to create a sort of manufacturing, engineering, capital goods kind of a impact overall. So overall, I think, I mean, if you just blank out what is happening globally, the Indian domestic economy looks to be quite strong. If you look at yesterday's PMI numbers, again, pretty decent numbers, strong numbers have come. So overall, things look quite good for India. The only thing we need to do is we need to stop reacting on a day by day basis to the global news flow. Today, if you see defense stocks are down because people are thinking that the war is going to be over, uh, and so on and so forth, right? So these are all daily changes. Tomorrow it may go up again because someone somewhere is bombing some other place. So these are day to day fluctuations. Unfortunately, that is something that as market participants we'll have to accept that markets have become much more volatile. It will take a while before that this kind of a volatility sort of reduces, but till that time we'll have to live with this volatility. But overall, I think structurally the Indian economy is very, very well poised. I would be very surprised if we don't do well from here.
Right. Mr. Basmalik also wanted to just get a sense on a few of the other pockets. Let's start off with defense. This space was again, on an upward trend. We did see a lot of momentum across the board. HAL, shipbuilding stocks, drone makers, they were all in focus. Just when this news of truce started to come in, the index has fallen. So I wanted to understand for the larger retail investors who've been looking at this new space as a core portfolio. Many investors have a basket of stocks within the same sector within their portfolio as well. How much of the move is only sentiment driven? How much of it is already in the price? What is the ideal way of approaching defense stories? Because we are talking about wars as the new world order. We are talking about the new orders that are coming in from various governments, renewed focus from the governments as well, as something that is probably providing a headwind, a tailwind to this entire space. How would you look at it and explain to our viewers?
So let's break it down into multiple time frames. So if you look at the very short time frame, I think a large part of the up move is probably priced in right now in the very short term. But if you look at the medium to long term, what we are seeing is globally, we are moving definitely from a unipolar US, sort of led kind of a world to where a lot of large countries will now need to fend for themselves. Now, with that in, as the background, if you see Europe, if you see China, if you see India, if you see the Middle East, everyone is going to, invest significantly for, building up their defense capabilities, and that is not a short-term story. It's a 5-year, 10-year kind of a story because now the 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 regime that we were in for the last 30, 40, 50, 70 years, that is undergoing a change. So defense longer term is a very interesting story. It's a long term story. Short term, I think a large part of the immediate up move is already priced in. I would also probably like to think that a large part is, could be in a very, a frothy stage. So you have to be very, very careful of investing freshly in defense names.
Okay, froth and be cautious for any fresh investments. At least in the shorter term, most of the good news seems to be already priced in. Let's talk about some of the other spaces as well. We'll talk about the railway pack. It was a slow mover in comparison to defense. Last time around, both of them almost went out in tandem with the kind of gains that were seen across the board. This time around, because of lack of any budgetary news flows that have come in, the space hasn't really kicked up. But now we are finally seeing news flows regarding, again, order flows coming in and some sense returning back to the same space. But do you think this is between the two a more vulnerable space to be in?
I don't think so. I think, see, what has happened was the reason why there was no additional budget provided to the
Yeah.
railways was basically because in the previous year, the railways wasn't able to execute uh, and consume the entire budget that was given to it. Right. So there's no point in just, increasing the number of or the capital given if you're not able to execute. I think slowly, because capacity building takes time. I was actually going through BEML's group meeting transcript just before today morning, and we are seeing, they're talking about uh, very good growth. They're talking about the Bangalore Metro getting sort of supplying to Bangalore Metro, and this is just one company. Across the board, we are seeing in more than 30 cities in the country. We are looking at metros, metro work happening. We are looking at Vande Bharats getting expanded. Uh, New coaches coming in across railways. We are looking at the covered systems that are getting rolled out for safety. So it's a multi-pronged approach, right? It's not that there's only one thing which is happening. So the entire chain of supply chain of wagon makers, of electric providers, of coaches, wheels, the entire segment is going to do well. Again, these are medium to long term stories. India definitely is going to be spending a lot of money on upgrading railways, and as it should, right? I mean, we are a very population dense country, and we need railways to be really efficient if we want to increase our productivity. So this is something that definitely is going to do well over the next few years.
Got it. So that's about the momentum sectors and those which have caught investors' attention of late. Let me talk about the large weighted sectors now. IT is something that I wanted to start off with. KPIT we've seen, what has come through. Again, there are some concerns there, on the outlook going forward. Accenture, came in as the first spot there. Even though they raised the guidance on the lower end, the upper end was retained there. How are you looking at the IT story? And with this geopolitical tensions now probably largely on the back for burner, because if once a truce has been called, there are signs that probably things could sort out. Again, shift focus. We will have to shift focus to the tariff news and the deadline approaching, and then therefore the export-oriented sectors like IT and pharma will be back in focus. How would you look at IT first, sir?
See, I think IT, there is a structural slowdown that is happening in the US. US economy is not doing well. Inflation is high. Things are not going for well for the US, right? In terms of the economy, and very large part of the Indian IT service business is dependent on the US market. So until and unless the US market picks up, right, it's going to be difficult for the IT services pack to really do well. Although the only bright spot in that is that these stocks have not performed, they are not very expensive, so they could be places to hide, in terms of if there's a problem in the market. So these are more, IT is now more a defensive name than anything else. I'm not very sure that we are going to get more than 15% CAGR growth in IT, at least in the
Okay.
near term.
Okay, so that's the IT pack for all of our viewers. Let me also talk about a few more other spaces. One space that I wanted to discuss is the Adani Group stocks. Today we have seen the AGM take place. Of course, there have been several announcements. There's also been a clarification or the first comment from Gautam Adani after the US SEC allegations. Where Gautam Adani has clarified that no, raising of concerns was done on the FCPA, violations were done, or, on the justification part as well. He's talked about that. He's talked about the, high standards of governance that they have come through. And of course, how from this trying period, the group has emerged stronger according to them. How would you look at the Adani group of stocks as of now?
See, I don't very closely, I've never looked at the Adani group of stocks very closely, but I've never known any, promoter to come and say that, we've come out of a trying circumstance weaker. So, I mean, it will only come out, later on, and we'll have to see. I mean, ultimately, we'll have to look at the numbers, look at how the performance, the business performance is. The business performance for most of the group companies have not been great over the last couple of years. It's possible because there have been a lot of, maybe mind share that has gone into the handling of, the corporate governance issues that has cropped up from time to time. But once that is behind, I think they are in very strong business areas, right? So infrastructure, ports, cement, they're very dominant in these areas, and I don't see, if India does well, why some of these businesses cannot do really really well.
Okay. Let's talk about a few more sectors, sir. Autos, how are you looking at the auto space right now, sir? Do you think finally the rare earth magnet crisis that was being called out at least 1 or 2 weeks back seems to be rather, on a buried foot? And how would you really look at some of the new launches. Tata has talked about Harrier EV now. Is that something that seems encouraging at this point in time? How are you looking at the entire space?
So I think I'm slightly more positive on the two-wheeler space right now
Okay.
compared to the personal vehicles. But I think overall we are again in this transition phase where we are moving slowly from ICE vehicles to EVs. It's going to take a long time. This is what what I term as the transition economy,
Okay.
and there will be winners and losers in this entire space. Right now, I think a lot of players are doing well. If you look at, Tata's obviously are the leaders in the car space. I think Hyundai is doing well. MG, I think MG Windsor has been doing really well in the EV space.
Yes. Yes.
Lot of these, and if I look at the two-wheeler space, I think a lot of the two-wheelers are, really picking up. Uh, I think overall it's a interesting market, and with rural income starting to rise once more, it actually could especially the two wheelers could actually pick up much more than the four wheelers.
Okay.
At least
So
that's my hunch.
okay, got that. Two wheelers more than four wheelers at this point in time seems to be a better space to really be in at this point. Let's also talk about a few other pockets that are in focus. I wanted to also discuss with you, the future of the mid and the small caps, the broader market, so to speak. Again, is it very stock selective? Difficult to take a broader call at this point?
Not really. I mean, see, market cap should not be a determining factor for looking at businesses. There are great small cap companies. There are lousy large cap companies. So ultimately, you have to be focused on the business, the promoters, the industry, and the overall structure of how things are. So in my mind, I am completely market cap agnostic, and I think again, if you do a statistical study over a period of time, you will find that mid and small caps, largely outperform the large caps, right?
Yeah.
Given
Yeah.
a longer time frame, simply because
Yeah.
they are smaller, they are nimbler, they are able to grow faster, etc. So obviously they are more volatile, but if you can digest the volatility, they can give you better returns for sure.
Okay, fair point. So that's the mid and the small cap pocket for you. How about the lagging FMCG space, sir? Still a no-go area for you?
Yeah, I mean, I think FMCG has some structural challenges in the sense that if you look at FMCG, what is happening is there is a lot of domestic or regional branded B2C players, and the challenge with or the moat that the larger players used to enjoy, the Nestle's and the ITCs, the Hindustan Unilevers of the world, was of distribution. Now with e-commerce, quick commerce, etc., that distribution might has reduced a lot. Today, it's far easier for a smaller brand to reach their target consumer market through quick commerce, and that's what we are seeing. We're seeing smaller niche players actually coming in, doing decent branding, and getting to the market. So overall, if you see, it's not that the FMCG market has reduced. It is that a large part of the market growth has been taken over by these smaller regional or smaller niche players. So I'm not per se, negative on FMCG, but I'm negative on these larger FMCG players because the room for them to innovate and grow has shrunk, and uh, the ability of their competitors to reach the customers is now at more or less at par with most of these larger players.
Okay, fair point. Let me also ask you, sir, on the banking and financial space. Now, before asking you on the key stocks in the listed aspect, I wanted to talk about the upcoming IPO, HDB Financial. What is your viewpoint there, sir? A lot of investors are really looking at this big ticket IPO, the largest one since we would have seen since a Hyundai IPO that has really come in, perhaps one of the largest in the NBFC space that we have ever seen. Among the top 5 IPOs that we have seen till date in the last 2 decades of our history in the stock markets as well. And therefore, the first one from the HDFC Bank. Now, we do know a lot of young retail investors would have not seen the time when HDFC Bank IPO would have come, and they were not an early entrance into that. And what large, short-term memory would tell us is that last 4 years have been rather disappointing for HDFC Bank, and they're used to of seeing that. But how would you look at an HDB Financial IPO as an opportunity, sir?
So brilliant company, very, very well managed, coming from an excellent stable. So nothing, nothing to say negative about. The only concern that will happen is that obviously, right, what has been going around in the private market, uh, the stocks were much more expensive than the IPO price that is, it's being to come out at, and that might produce some kind of a challenge for the stock price. But excellent company, very good space, very well managed. So, if one uh, is a buyer in a company like this, you want to sort of stick around and hold on.
Okay, got that. And now about the parent firm, would you, and if I have to ask you to choose between the two, how would you go with it, HDFC Bank versus HDB? What would you go with?
I would still go with HDFC Bank, much larger. I mean, there's no comparison. It's the largest bank that we have in India, extremely well managed, great franchise. In fact, I remember, you know, probably 20, more than 20 years back, one of the first articles that I wrote for a national daily was, was a thought experiment that if I had to buy only one stock, and I think this was 2000, maybe 3, 4 period, uh, and that would be HDFC Bank, and uh, and lot has happened over the last 20 years, 25 years, but the bank has done phenomenally well over the over this period. Uh, Obviously, in any business, there will be periods when things will not, uh, you know, always be great, and the business has seen cycles. But I think overall, it's been a fantastic journey. I think starting from 1995 to till today, it's been one of the greatest wealth creators that India has ever seen.
Absolutely. Well, Mr. Basu Malik, we always appreciate such deep insights that you always share. And this really helps a lot of our viewers get that clarity in mind as to how should one really look at the upcoming opportunity. Just because there is a lot of interest being developing, should you look at it? Or should you rather take a measured approach and look at the parentage firm and look at where exactly would you probably make more money? Thank you so much for being with us and sharing such wonderful insights as always on Business Today Television. We'll leave you at that, sir. 2 minutes to go before the market shut shop, and we will now look at how the markets are faring. Start wrapping up the day's trade. 25,072.4% higher as far as the markets are concerned. 100 points up in trade, so slight uptick from the day's low point is what we see, but a lot of choppiness at this point in time. PSU banks hover 1.4% higher. Metals, financial services, private banks in the thick of action. You can see the broader markets also about 0.6, 0.7% higher. FMCG, pharma, realty also contributing with some gains. Autos, infra also up. But IT, oil and gas have slipped, and also the media stocks. Jio Financial at 301 remains the top mover, 2.7% higher. Adani Ports, Shriram Finance, not too much of a rejig between the gainers when we look at the last few hours of trade. On the lower end, ONGC, Power Grid, IndusInd Bank, Maruti, Trent. These are all the stocks that are declining. Let's look at the F&O movers. Titagarh Rail, Vodafone Idea, Delivery. These are all the stocks that are hovering higher in trade. While on the lower end, KPIT Tech, Oil India, Bharat Dynamics, ONGC are the top laggards at this point in time. Let's also look at the broadest index, the top movers in the Nifty 500 basket. You have names within the rice names, you had, remember, Chaman Light, Setia Exports we had talked about in the morning. You have Heritage Foods, LT Foods, that's also buzzing in trade. These are some of the pockets that you can continue to keep an eye out on. Apart from this, a lot of other names that are holding up. Butterfly Gandhimati Appliances from Consumer Durables is up in trade today. You also have JM Financial and Edelweiss from the capital markets brokerage stories that are doing well. Kokuyu Camelin is up in trade today. Smart moves there. 63 Moons Technologies from the Midcap IT basket, that's up in trade as well. These are all the names that are actually holding very well. India Glycols, that's up 7% in trade too. So those are the names that are holding up in trade. 103 points higher at 25,075 is where we end off the high point of the day. But let's see how things progress. A lot hinges on as to what happens over the next 12 to 24 hours, 12 hours in trade, and then we will get to know how the markets will be poised to open up tomorrow. Remember, Iran, Israel is the key focus. Any signs of truce developing and a ceasefire continuing for a long haul will indicate that the worst of the war fears may be behind, and then markets can start focusing back on business. We leave you at that. Many thanks for tuning in, but do stay tuned on to Business Today Television. Even after the market hours, you will get to see and hear a lot of update from the world of business and finance. Stay tuned. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show that answers all your stock-related queries.